So I opened a very big short position today on SMCI finally, and what I want to do in this video is share with you guys why I took the trade. I am in no way telling you that you should be going short on something like this. I am in no way saying that I know more than anybody and that SMCI is going to crater. All that I'm doing is sharing why I'm taking this position and what my plans are. Now, today, we're going to go through the actual position that we took. Closed $11,000 in profits today, which is very, very solid. The past couple of days and the past couple of weeks really have been heavily consistent when it comes to our trading, only having 2 red days in February so far. But let's actually isolate the position that I ended up taking today, and I want to show you guys the multiple executions that we took on this trade. Now, when I entered this position, I shared all of this over on my X account. So if you guys are not following me there, or if you're not watching this video there, you need to be following me because it's the fastest way to know when I'm entering and exiting a position. So this is a snippet from our Discord community, which if you want to be a part of the Discord community, the link is in the description as well. I said I'm shorting 50 shares of SMCI right now at an average of $921.95. If we go over to my trading journal, you're going to see here that this is where we ended up taking that position, $921.95. I said I do plan to add 50 more with $1,000 or 50 more short at $1,000 with a stop loss at a break of higher high. I don't recommend this for most people, especially beginners. It's very risky if you're forced to grab trade or put contracts. So in this instance, I went short with shares, and I'll explain why I did that instead of puts. Puts are very expensive, and for most people, you cannot use proper risk management with that big of a contract. I truly believe that it's best to just sit out and look for a better play that's going to be safer. There's always another opportunity out there in the market. So, why did I go with shares short versus puts? Well, the biggest thing, which doesn't hurt for me too much because fortunately I've been doing this long enough, I have a bigger account. But if you're somebody who has maybe $5,000, $6,000, $7,000 and these contracts cost you $1,000 per contract, you can't use proper risk management. If you're trading options, I personally recommend at max 5 to 10% of your allocation capital in one trade. And that's absolute max. You don't need to have any more than that because you should never be that exposed. You never want to be in a situation where 1 or 2 losing trades in a row could decimate your portfolio. Now, looking over here, the first entry on the left side of your screen was at 12.03, and that was at an average price of $921. As I said before, I was planning to average down, so short another 50 shares at $1,000. That happened right here. We got in for $999.19 going into 330, so at 336. At that point, we did drastically sell off, and we saw a bit of a drop back down to 951. So let's go through briefly why I ended up entering this put and why I've been looking at this. I've been covering this on X and I've been covering this on YouTube for a very long time now. You can go and just look back. We did a whole video on this last night, but I'm expecting a market bubble and a complete capitulation. So what I'm expecting in this point, and this is the reason I went short on SMCI and I did not go short on NVIDIA. I'll explain that for sure. But in this point, we get this massive run up. We get this big push up to highs of 1075. Once this candle comes in and we get this massive sell-off, this is a huge, huge candle. We never had a bearish tail like that since this breakout. This is a ton of profit taking. We see this drop back down, and I've been saying this over on X for a while now that we're going to see a retest. We have to see a retest of this level because what's going to happen is we're going to get this push up 43% in 3 days, and everybody who got in here, who didn't get in here, is now going to try to get in where the bull trap is, right? Because they want to, and this is why I hate it, because it's usually good people who are going to end up losing money, and I hope that doesn't happen. But all of these people have to become liquidity to big money. And so if you're liquidity to big money, you're basically there to take their bag. Now, there's a chance that SMCI will probably just push up to a higher high, and I'll end up taking a loss. It'll probably be about $15,000 loss. But if we reject, which I do think we will see, my price target to the downside is $752 and down to about $600. So in this instance, I will risk $15,000 in order to make $36,000. And in all of my years of doing this, and yes, of course, every single situation is different. SMCI could not work out. But in most cases, this pans out about 75 to 80% of the time. And so it doesn't mean that it's going to have to pan out this time. And I don't care if it pans out this time. I'm not worried about this. We're worried about hundreds of sequences of trades over decades and years. So if this pans out, great. If it doesn't, who cares? And I've seen a lot of people who say like, oh, it's complete gambling. And, if you get in up here and it's like, yeah, you're right. I could just go to a roulette wheel. But the thing is, the roulette or the casino is not going to give me RVRs of 3-1, 4-1, 5-1. And of course, you can arbitrarily throw shit wherever the hell you want. But if we're really looking at where this downside target is, we will take our Fibonacci retracement from swing low up to swing high, and we will find that profit target somewhere between the 0.618 and the 0.786. But what I plan to do is, as we reject and move our way down, I will take shares off the table short and start to lock in some sort of profit. So my exit requirement for, taking a loss on this trade, that will be a break and a close above $1,100 up into this higher high. But at this point, we're inside of this order block. We've broken equilibrium. And I do think that there's a very, very good chance that we see SMCI reject back down and test a lower low. We called it on Mara, right? Same situation. We called it here. Not this recent one. This recent one, we got a massive put position. But this was the same exact setup over here. Same setup. Order block, tested into it, and they got stuck holding the bag. Now, of course, we ended up continuing to run, months later, weeks later, but still, from highs to low, that's a 49% drop in 1 week and 1 day. And if that plays out the way that I'm expecting it to, we're going to make about 30 grand. So I hope that this helps. I hope that this works out. If it does, great. If it doesn't, who cares? We don't put emotional attachment to our trades because our worth is not defined by how many fucking pieces of paper that we have that's not backed by anything or how right we are when it comes to trading. Thanks for all the support, guys. I'll see you next time.